big day on Bond Street. Indian bonds enter the JPMorgan Emerging Market Bond Index today. The Indian government securities have apparently already seen worth inflows of about $8 to $10 billion in this year. Actually, starting September, when it was announced that India will be in the index from June 28th. So some inflows have come, but it's a $30 billion almost that is expected because India has a 10% weight in that index, tracked by about $300 billion worth of bonds. So we should get 30 billion in the fullness of time by March 2025. But what happens today? Are people sitting on the sidelines? And on June 28th, at least 1% comes in. So, 1% weightage, which means does $1.5 billion, $2 billion enter today? Are we going to see some fireworks in the bond and currency market? For the immediate and the medium-term questions, Neeraj Gambhir, Group Executive and Head Treasury Markets and Wholesale Banking at Axis, and Parul Mittal, Sinha, the Head Financial Markets, India, and Co-Head of Macro Trading South Asia at Standard Chartered. Parul and Neeraj, thank you very much indeed for your time. Parul, what is the screen saying? I found the bond yield flat, but, London opens at whatever, 1 o'clock our time. Are we going to see some, 6.95, 6.94, 6.9 today?
So yes, like you said, bond market is opening quite flat. There is quite a lot of excitement, discussions with sales, with clients going on. We are seeing a lot of queries as well by clients, but we don't expect that because bond markets, like you all know, that we are a very deep and liquid market, and I expect that a lot of participants have already built up a fair bit of positions to offload as and when these purchases come in. Also remember that we have a regular scheduled auction day today, so the market has to absorb that supply as well. So we're all excited about the potential inflows. What we expected, if the inflows are to the tune of $500 million to $1 billion, market will remain positive and optimistic of these two countries come in. If, however, we print less than $500 million worth of purchases today, that would mean somewhere market participants are disappointed. We will expect that maybe the pace of inflows that we were expecting to be of 2 billion per month, some expectations will get petered down. We just to remind the viewers, more than $10 billion have already flown in of the 25 to 30 billion of inflows expected. The main question on all our minds is this 10 billion in addition to the 25 to 30 billion dollars? Or part of that
Parul, may I interrupt you? I think you have to set your audio right. There is some bit of a jar in the audio. Coming back to you in 1 minute. Neeraj, what is your sense of the same thing? We know that 10 billion has come, but we don't know whether all that is only by the passive funds. At least nobody is telling me that. Is it possible that people would have registered and will be waiting for today to come? Should we expect something second half?
So, Latha, as far as the exposure by index tracking funds is concerned, they actually have three different ways of taking it. One is by direct investments in the government bonds onshore. Second is that they can also buy some of these rupee-denominated bonds issued by supranational entities. And thirdly, they can invest in derivative instruments. So far, we've seen about $11 billion, which has been the increase of FPI holdings in the local bonds. We don't know how much of that is by index tracking guys and how much of that is by sort of active fund managers who may not be necessarily tracking the index, so hard to say that. Secondly, some amount of investments has also happened through the supranational bonds. So the question is that out of this $25 to $30 billion, how much amount will actually come into India and how much amount will be invested through the supranational bonds? So that's what Indian markets will not see. So estimates are somewhere between $1.5 to $2 billion of fresh inflows over the next 10 months, which will basically total up to somewhere between $15 to $20 billion. But that's an estimate. Actuals can vary depending upon market conditions.
Fair point. Well, actually, I have learnt all the jargon over the past few days. Supranational bonds are bonds issued about India, on India by, ADB and institutions like that. So that's one way of taking exposure. There you don't have the tax problem, withholding tax issue. So some people take exposure to India through that. The disadvantage over there is it's not a very deep market, I was told by Kenneth Akintewe of Aberdeen Investments. He was on the show yesterday and he said, yes, Supra is a good idea because we don't pay tax, but it's very difficult to get out of that market, hardly any liquidity. So people like him still believe that the money will come. But Parul, now we have you on a better line. If, let's for argument's sake, assume that people have registered, some people called it a very painful registration process, but they have registered and waiting, and say 500 million or 1 billion comes in post 1 o'clock today. Is it that Indian banks are sitting long, people like you all, and will immediately sell, the PDs or something? Or do you think they make... Today there's also RBI auction, no? So they can buy the 10-year over there. Short point, will the 10-year bond yield in the market see any movement today?
So, Latha, if the bond yields close lower by 2 basis points today, that is the maximum any of us will be expecting for that to happen. Like you said, a lot of market participants are already sitting long in anticipation of these flows. Also, the auction today needs to be absorbed, and that's in the new 10-year bond as well. So we don't expect a move bigger than 2 basis points. So the range will be, if market is disappointed in terms of flows, if less than $500 million of inflows comes in today, we can expect bond yields to inch higher by 2 basis points. If we see inflows closer to $1.5 billion, then we can expect a 2 to 3 basis points rally. Okay. Even there, I expect the domestic banks to come in and take some profit, because bonds have been really stable in the last few months, really range bound. So we've seen selling on the days of some bond yields moving lower, and purchases by them on days where yields go higher. So that trend will definitely continue.
Fair enough. So at least the yields are capped. There is this big buyer on certain days. Neeraj, what would you say is the structural change over the year? By the time we come to March 2025 or whatever, even June 2025, what can be the advantages or otherwise for the Indian market?
So, Latha, first of all, $1.5 billion to $2 billion of monthly flows is actually very small for the bond market. The daily trading volumes and the amount of bonds that are held by some of the large domestic players, including banks, are actually quite a large. So it's not as if this flow is going to make a very big difference to the market. I think the key change here is that we have a completely new investor class globally, which has so far not been exposed to Indian fixed income market. It will get to have an exposure into India. It will force some of these investors to actually look at India closely, look at India's macro story closely, and position themselves accordingly. I think it basically, effectively exposes India fixed income market to a very large and very deep pool of, capital and a set of investors who have all along basically been on the sidelines or may not have invested in India because they really didn't need to, because we were not a part of any index. Now that it changes. I think over a period of time, it deepens the market, it brings more flows into the market, and it brings a different class of investors.
Okay. Fair. Would you say that corporate bond market will be also getting some kind of legs to run, Neeraj? Because, yeah, go ahead.
So, a direct and indirect benefit. The indirect benefit is that if the government bond yields stay low, it basically makes the corporate bond yields also stay low. So there is a pricing benefit there. The indirect benefit is that a set of investors who are actually looking at India fixed income market, they may start from government bonds, but over a period of time, they may start looking at some of the other instruments as well. For example, some of the PSU bonds, which are quasi-sovereign, they may also start being interested in buying in them. So it expands the horizon.
Overall, cost of capital could fall a bit. Parul, now to the more important question is rupee. I was told again by Kenneth Akintewe that the most attractive part of India is the rupee, the most stable currency. Do you see, appreciation? Just what should we be prepared for in the currency market?
So today in the morning, amid a lot of queries and some inflows also on the dollar rupee side, we saw dollar rupee move lower by 5 to 6 paisa compared to the previous close, and that itself, creates some excitement among the traders because dollar rupee has also been trading extremely stable. We think dollar rupee can head down to 83.30 kind of level because of inflows which may be lined up today. But there again, range trading remains the core proposition for traders. Traders would probably take the chance to go long here and look for an uptick above 50 paisa or so. So not very big moves expected. The point being, the size of inflows is much smaller than the normal daily volumes, either whenever we look at either bonds or FX. So I'm not expecting sizable moves, but yeah, 5 to 10 paisa movements here and there. That will keep the market excited.
Over the year, like as we go towards December 2024, you think there is a chance of rupee appreciation, 82 something, Parul?
Not expecting it to fall below 83. We still think it will remain stable around 83 levels, mainly because we expect RBI to step in and continue to collect reserves.
Yeah, I was also told that they are looking at even the yuan very closely, or should be looking at the yuan closely, which has been depreciating. So maybe Reserve Bank won't allow the rupee to appreciate. Neeraj, medium-term view for the currency. Now and up to the end of the year, you think appreciation is possible?
I think to answer your question, Latha, the overall impact of these flows will be approximately $20-odd billion. If you look at a balance of payment situation, I think if you look at surplus of about $50 to $60 billion, the 20 is being contributed by these flows. Had these flows not been there, we would still be having a balance of payment surplus. Now, whenever we have a balance of payment surplus, the direction of rupee is entirely governed by RBI's intervention strategy. And I think they have been very, very focused on keeping rupee as a very stable currency, making sure that there is no undue volatility. So I think that trend will continue. On a broader basis, I think it also depends upon what happens to dollar. It's been very strong. We've seen, dollar index cross 106 and maybe targeting 107. So if the dollar strength continues, I would feel that despite the fact that we will have these flows, we might have a bit of a weakening bias on the currency.
Okay. Very quickly, Neeraj, running out of time, but do you think Indian banks are in a good position? They are the guys who hold all the bonds, some mark-to-market gains or at least not losses?
Well, the move hasn't been very large. I think they're still stuck at around 7%. We're trading about 5 basis points here and there. So I don't think it's making a huge difference to the valuation gains to the banking system. But yes, I mean, to the extent it creates more demand in the market, I think the overall demand-supply situation for government bonds looks far more favorable than it did, let's say, last year.
Okay. Out of time, but of course this calls for a medium-term discussion rather than a today discussion. But Parul and Neeraj, thank you very much indeed for your time. You're stepping in. We are stepping into global indexes. So today is not the day when there will be fireworks. But clearly, it was in 1994 that India stepped into the global equity indexes, just feeling the ground, as it were, entering the MSCI index. And now, we have something like $800 billion in Indian equities. So this is the start for the bond market. And perhaps the best times will come over the decade as, India becomes more accepted as a bond instrument investment. Thank you very much for watching this special show. It's time for a break. Chartbusters coming.